time to do business again. Good morning, everyone. Welcome to Business Morning. We have 55 minutes to do current and relevant business talks. I'm Ini John Mekwan. We start, as usual, from the global space where oil prices extended gains on Thursday, bolstered by signs of strong demand in the United States with uncertainty over efforts to end the war in Ukraine. That's also lending support. Looking at the numbers, we see Brent futures hit a 2-week high in early trade, and we're up 41 cents. That's about 0.61% to $67.25 a barrel, while the WTI of the United States, that's added 45 cents. That's about 0.72% to $63.16 a barrel. U.S. crude inventories fell by 6 million barrels last week to 420.7 million barrels. That's according to the U.S. Energy Information Administration. Gasoline stocks dropped, on the other hand, 2.7 million barrels. That's against expectation for a 915,000 barrels draw, according to the EIA, indicating steady driving demand during the summer travel season. And that's also seen in a jump in a 4-week average for jet fuel consumption to its highest since 2019. Well, still staying in the oil space, but back home here in Nigeria, the Minister of State for Petroleum Resources for Oil, Senator Heineken Lukwebiri, has assured that Nigeria remains fully committed to the rules of the Organization of Petroleum Exporting Countries, despite recent gains in crude oil output. Mr. Lukwebiri said that Nigeria would not exceed its production quota, but will continue to push for a higher allocation to reflect its capacity and ongoing sector reforms. His remarks come amid fresh data showing that Nigeria has kept crude production above the OPEC quota for the second month running, with output rising slightly by 2,000 barrels per day from 1.5 million barrels per day in June to 1.5 million in July, according to OPEC monthly oil market report. And let's stay on this with the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Korani. What this might mean for Nigeria and other related issues in the commodities space. Mr. Arwani, good morning and welcome to the program.
Good morning and thank you for having me.
So I wonder why it became necessary for Mr. Lukwebiri to make this clarification that Nigeria will not go above the OPEC the OPEC quota given, while we see a steady increase in the crude production of Nigeria.
Well, I think normally in a cartel or an oligopoly, you agree on price and output. We have a quota of 1.5 million barrels, right? And that is, we have exceeded the quota in the last 2 months by about 1,000 or 2,000 barrels. But if you look back, cumulatively over the last 12 months, we have underproduced. In other words, if we are to claw back the underproduction we've had for the past 12 months, we still have millions of barrels to produce, which will make us in compliance. Having said that, it is important that in an oligopoly, it is a gentleman's agreement that this is what you produce, and this is what this is the price at which you sell. Now, the statement by Minister Lukwebiri was clearly saying that we intend to comply with the quota, and I think that is important. But when you look at some of the aspirations of the Nigerian government, we're saying that we are trying to produce up to 2 million barrels a day. Then that aspiration is in contrast and, in fact, in complete negation of the commitment. Without OPEC and without the OPEC plus, then the price of oil could crash all the way to $20 or $30, which will hurt everybody. So I think it's important to note, one, that we are compliant. Two, that if you discount for what, or if you make a provision for what we underproduced in the last 12 months, we are still way below the quota. But the thing about quota, it's not cumulative. Once you miss the quota, you've missed it, and therefore you have to comply going forward.
Exactly. Exactly, Mr. Rani, because, I mean, the quota is for the monthly, daily million barrels per day production, yes, and not cumulative. But, I mean, just as you noted, and we know that in the 2025 budget, the target is 2 million barrels. Does Nigeria have enough time to lobby the OPEC to be able to increase its quota so that it will allow it to legally and gentlemanly, as you put it, produce up to 2 million barrels per day?
No, the point is that we have little leverage in OPEC. First and foremost, we are one of the most vulnerable members because our income per capita, economic data shows that we are a fragile and fragile member. And so what we need to do is to work our way through it and convince our fellow members of the cartel that, look, we need this. Our needs are quite significant, our fiscal needs, our debt servicing needs, and all. So I believe OPEC will give us some leeway, but we have to get that clear before we start making statements of aspiring to get to 2 million barrels a day before the end of this year. By saying you have already put OPEC on notice that you want to be in default, and then there are penalties that come with that. So we have to be very careful about the sound bites that our officers are making on one hand, and then the comments later on to say, no, we intend to comply and we're going to lobby OPEC. You've already said that you're going to be in default no matter what. So if you are going to be in default, then leave OPEC if you have to do that. But I don't think it's in our best interest. So what we need to do is to coordinate our speeches and our policy statements so that they are all synchronized.
Yeah, Mr. Ruwan, it looks like, like in many things, Nigeria are walking away from behind. After we have made the pronouncements, we are now thinking of the consequences and all of that. But anyways, let's see how the minister and, in fact, they will handle all of that. But we saw the Naira appreciate slightly. Recently, conversations around the Naira had been maybe kind of boring because we've seen a steady Naira. But we also saw that report that from FMDQ that the inflow of FX has been good. Perhaps that explains this slight appreciation of the Naira at the close of trade yesterday.
Well, I think the Naira appreciation, basically, you don't measure the Naira on a day-to-day basis. You look at it over a period. When we look at the level of misalignment, and is this currency strongly misaligned from its fair value, and how do you determine the fair value of a currency? There are many factors that go into determining the fair value. So you have the purchasing power parity analysis. You have the hamburger index, which is the one commodity item. You look at the inflation interest rate differential to see exactly whether this currency is strengthened. One thing you must be clear is that because the interest rates are high, the foreign portfolio investors are bringing their money in. The moment you begin to drop your interest rates and they see that the carry trade is no longer profitable, they will move their money out. So it is not fundamentally addressing the strength of the currency, but what we are having is what we call a managed float. That we are managing the float using many variables to determine that. And that way we've been pretty successful up to now. But it doesn't mean that the currency has become overnight strengthened, because look, your reserves are at $41 billion, which is the gross reserves, but also you have issued debt instruments of $4 billion, $2 billion diaspora bond, and $2 billion in the Euro bond. So if you net off the reserves from the debt that you have accumulated, you'll find that you are where you were earlier on. So that's something that we need to bear in mind. Yes, we are making some very, very major positive policies, but we must believe in the reality. The reality is that there's still some fragility, there's still some weaknesses, and that is why what's going to happen at the MPC meeting in September is very, very important that we note this, so that we don't get carried away by short, what we call technical movements in the foreign exchange markets. The fundamentals are still, there's still work to be done at the fundamental level for currency management.
All right, Mr. Ruwan, I know we talked about the domestic commodities on Tuesday, but any change, anything new from that front?
Well, what we've seen in the commodity markets is been flatlining. You can see that Gari is at 32,000. We see that tomatoes is at 70,000, which is pretty high for this time of the year, a basket. Pepper is at 75,000 as well. And beans is at 80,000. Rice is at 85,000. And flour is at 61,500. Flour is the one that has major import components. And therefore, what it's telling you is that the harvest season is here. The harvest season is going to be shorter this year. The market expects prices to begin to increase again at the end of this month or early next month. There are some weather conditions that are pretty strange. Lower temperatures in the south, longer rains in certain areas, and there are also some near temperate conditions in the plateau. Therefore, what are we going to be seeing? We are going to be seeing commodity prices begin to decline because the currency is strengthening or is stable against the dollar. We are seeing less of export smuggling. People are not smuggling foodstuff across the border as they used to do. As a matter of fact, some people are bringing it in, and that has helped to stabilize prices. But the major thing to worry about is productivity at the farm level. Productivity, productivity means that you are using the correct fertilizer, using the correct seedlings, and also that the products that when they leave the farm, they are properly stored so that we reduce the post-harvest losses. It's a full ecosystem thing in which the entire production to the processing to the storage and also transport logistics to the market takes into consideration to determine the final prices.
All right. Thank you so much, Mr. Bismarck Rouhani, for giving us those insights this morning.
Thanks for having me this morning.
All right, now moving on. Now, the National Information Technology Development Agencies, that's NITDA, they say that big tech companies, including Google, Microsoft, and TikTok, they deactivated more than 13.5 million accounts in 2024 as part of compliance with Nigeria's Code of Practice for Online Safety. The announcement followed the submission of the 2024 compliance report under the Code of Practice for Interactive Computer Service Platforms and Internet Intermediaries, which is a framework jointly issued by NITDA, the Nigerian Communications Commission, and the National Broadcasting Commission. According to NITDA, the compliance reports provided by the platforms revealed that users lodged a total of 754,629 complaints in 2024, leading to the takedown of 58,909 pieces of content judged to be harmful. In addition, 420,439 items of content were removed and later re-uploaded following successful appeals by users, while about 13 million accounts were permanently closed or deactivated for violations. And in Oyo State stands an edifice which celebrates Nigeria's regional independence, at least before now. It's the Cocoa House. It turned 60, and the Southwest government came together to celebrate this feat. The iconic Cocoa House is 60. For dignitaries seated inside the Cocoa House in Ibadan, the Oyo State capital, it's nostalgic, being in the first tallest building in Nigeria and parts of West Africa. The management say it's a greater call to duty to preserve the heritage and improve the economic viability of the building.
Cocoa House began as an ambitious vision of Western Nigeria Marketing Board to create a landmark symbol of prosperity funded by the region's thriving cocoa trade. Kappa and Labato was approached because of the proven track record in delivering complex, high-profile projects across Nigeria.
Cocoa House is our talking drum. It calls us to remember who we are. She is our oriki in stone and glass, telling the whole world of a people who could plant cocoa and harvest skyscrapers.
The owners of the Cocoa House, the Southwest governors, are ecstatic at what the future holds for the edifice.
The evolution of this building's name into Cocoa House reflects not only a change in name, but a deeper recognition of the pivotal role cocoa, along with rubber and timber exports, played in financing its construction and, by extension, in driving regional prosperity.
with series of initiatives evolving from projects under Odua investment, especially under agriculture. Farmers of cocoa, cassava, cashew, rubber, timber, and other cash crops in the southwest could as well get a new lease of life, a lifeline capable of putting them back on the global map as serious players in the industry. Let's talk fashion now. Nigeria's fashion market is estimated to be worth between $2.5 billion and $6 billion annually. Some reports even suggest that it contributes approximately $6.1 billion to the nation's GDP every year. And there are projections suggesting that the market could reach a volume of $1.8 billion by 2029. Menswear stand out here. We see menswear alone is expected to reach about $2 billion by 2030. And there are some trends that we have noticed recently. We see the local Ankara being given some fashion touch. And the report also show that exports of such materials have increased about 20% year on year. That should be good news. But let's find out if this really trickles down, to the players in the industry. We have right here in the studio a creative director and chief executive officer of Glue by Nasri Elias. Mr. Nasri Elias is right here in the studio. Mr. Elias, good morning and welcome to the program.
Good morning. Thank you for having me.
Yeah, so we see good news here. I mean, we're talking of billions of dollars. How much do you have with you? So I know if I should come and kidnap you or not.
Well, I mean...
these numbers, I mean, we see them in research and all of that, but does it come out as real to you, being in the industry? Do you really feel that this amount is circulating in the fashion industry, whether by exports or consumption locally?
So, yeah, the numbers is actually circulating, and at the same time is also shared between Nigerians and international brands and international producers, most especially fabric manufacturers. So when you say, most of these fabrics are originally not made in Nigeria. But the example is Ankara, for example. Ankaras are not totally produced in Nigeria. They're actually imported in, produced outside Nigeria and then brought in.
So that's what you mean by it's being shared?
Yes, that's what I mean by being shared.
So even though we have the materials brought into the country...
Yeah, then we create and then we localize it and make it look like ours. What is originally ours from start to finish is Ashoke and the Akwoites, for example. So because they're actually woven from thread all the way, from the yarn level all the way to the finished level. So that is where we have the money being shared within the Nigerian value chain. Do you understand? So you talk about the people from the producers of the yarns all the way down to the weavers and the weaving companies, dyeing and all of that, all the way till the designer and then, So the value chain there.
What's the percentage of that Ashoke, the one that's totally Nigerian? What's the percentage in all of this?
In all of this, I would say Ashoke is maybe about 5 to 10%, because we have, even when we talk about Adire, for example, Adires are usually originally maybe made from a fabric that was imported and then, dyed into Adire. You can have maybe Guinea brocade dyed into Adire. You could have maybe linens dyed into Adire. You could have chiffons dyed into Adire. So because we do not really have that manufacturing end in the fabric production, so then people have to localize to, tell our story with what we have at the moment. So that's basically where it starts from.
But it's not like we can't do this thing. I know before now, our textile used to be a major stay for the Nigerian economy.
Yeah, so, I mean, in the, I think it was in the 70s or thereabouts, I read about that too, that the textile industry...
Oh, you did not even experience it.
Unfortunately. I didn't experience it. So I read that the textile industry had over 86,000 Nigerians employed in that line, in that value chain, and it was a really, really massive one. I believe that we can actually revive it, and this is the time to revive it. This is time to have industry players come in so that we can create value from the beginning till the end. and
So
then
we hear a lot
empower
of government
Nigerians.
policies coming up now are trying to revive the garment and textile. I wonder if it's trickled down to you in any way.
You know, most of these policies take a while before they have an effect. But, I mean, firstly, we have to really give it to the entire Nigerian people and the Nigerian government for what has been done so far, because I remember when we started and what we have now, or maybe even when we look back to the 90s, you know, most of the there were just a few designers in the space, and you could you could count them. Well, the other types of people you have is the machinists, which people call tailors, where you just walk into and then you just give them your fabric, they produce. So there's really no standard there. But when you have people like designers in that space now, there's a lot of standard that's been brought into the space. And then we are really poised for exports, the way we look already.
So we see export has increased by 20%.
Yeah. I mean,
or
obviously,
is it more than that? I think
I think
also.
exactly.
Informal export happens
there's
so much in this
There's
country.
a lot of informal exports, you know, because you have people who even come in and say, okay, somebody's traveling, okay, let me just have that. That doesn't go into the records. So all of those put together shows that, I mean, a lot is already happening in the space. So it's just going to take a while, and it will take, what do I call it? It will take the right word to use is deliberate attempts towards ensuring that this money actually spreads within the Nigerian value chain, not the external or the importation value chain. Because what we really need to do is to domesticate that money and then make it work for us.
I wonder if you see the government leading in this consumption. You're talking about the trends among consumers now, consuming the Nigerian. I know I'm guilty of it, but at least I have my leaders there, from the executive to the judiciary to,
But if we look
because
at it...
even a lot of them, you see them wear things that look like local materials, but they're actually imported.
And so the materials, like I said, materials are not locally made.
Is it because we cannot have our good quality materials?
So that
or is not enough to go around?
So what I'm saying is, okay, so in terms of textile, maybe textile produced in Nigeria, the only fabric company there's only just one fabric company that produces t-shirts and polo fabrics. And then they also do things like maybe school uniforms and all of that. But if you look at the finish, and the companies are not even owned by Nigerians. The company, is not owned by Nigerians. So the only Nigerian company that once sprung up in, it was between 2008 up until like 2015 or 2013 when they shut down. They were only in the space for about 6 years or 5 years, and then they shut down. Their fabric was even better than the other non-Nigerian company that was producing, but they couldn't keep up.
Was it money? Was it demand?
The challenge was there was still a component in the production that they needed to import. And the only person that had license, according to what we heard, was the Indian company who owned the other big part of the importation.
So obviously he will prioritize his own needs over the need of the competition.
Yeah, exactly.
And
maybe volume was also a factor, because
that's demand.
Yeah, so maybe they didn't have their volume because their prices was more expensive than the other Indian company that was in existence prior to that time.
So if the government really is serious about all of the revival of that sector, I guess the first thing would be to get an entrepreneur perhaps who has been in that line of business before to produce this. Because if you say in the whole of Nigeria, I mean, it's your word, I've not done the research, but the only one textile producing company.
Yeah, that's in the t-shirt line. In terms of other types of fabric, say you talk about maybe, we are used to using most Western fabrics. Like what I'm wearing is made in Nigeria, but the fabric is Western. This is like a wool fabric, and so the wool fabric is not made here in Nigeria. So if you look at...
Is it because we don't have enough wool or cotton?
No, in terms of cotton, we're actually one of the biggest producers of.
On paper or in reality?
In reality.
Ah.
Like no, I'm not talking about finished cotton. I'm saying
Yeah,
raw
I'm talking about
material.
the raw material.
The raw material. The North has a lot of cotton, and then a lot of companies abroad come to source cotton from the North. But the problem
so we are
there
exporting our raw material to
exactly
buy the finished
to
product.
buy the finished
There you
products.
go again. Another
So
sad
that's
story.
so that's the part to that, and the process to creating it, to turning it into yarns. I'm not sure the knowledge is still there anymore. I'm not sure. I'm not saying I've done the research because it's been a long time since this factory is shut down, and it takes skills to get all these things done. Move through the processes before you get it to finished.
I'm sure there's a Nigerian abroad that's doing it, and if we really want to do it and invite such an individual to come and set up a company here and give all the incentives, I'm sure we can get the company running in a couple of months.
So it's going to require a lot of incentives from the government to ensure that people see it worthy of coming in to, invest and get these things up and running. It's going to take a lot of that incentive to encourage Nigerians or encourage foreigners to bring in the money, because it also takes a lot of money to set up this type of infrastructure.
Every time I hear how we sell out our raw materials, it's just so heartbreaking.
Yeah.
We're looking for jobs, talking of unemployment
exactly.
and
So,
everything.
because if we look at over 86,000 people that were employed in the garment manufacturing sector back in the 70s and 80s, you see that is already about 400,000 social capital gone. I mean, what's the word for it? That's about 400,000 people already taken care of, because for everyone that has a job, takes care of like 5
the households
dependents.
And the value chain. But thank you so much for painting this not so happy picture for us, but our reality. Creative Director and Chief Executive Officer of Glue by Nasir Elias. Mr. Nasir Elias, for your time on program.
Thank you.
Thank you.
Have a wonderful
All right,
day.
let's take a break now. When we come back, the hospitality industry is our focus. Please stay with us. Welcome back. It's still Business Morning here on Channels Television. We look at the hospitality industry now. Another big one for Nigeria, set to bring in some big money and non-oil money into the sector. There you have it. The projection is that by 2029, Nigeria's hospitality sector would have a market value of about $2.61 billion. And it's supposed to be driven by rising domestic tourism and increased investment. I hope we're on our way to that. It's also stated that the market's projected to be up to 2.61, topping the 18.78 million of that hospitality industry movement, especially post pandemic. It seems that a lot of things have coming out of that. So the revenue by 2025 is supposed to hit $1.67 billion. Growth rate is supposed to be about almost 12%. And that's supposed to take us up to $2.61 billion by 2029, about 5.4% contribution to the GDP between 2022 and 2032. And it's supposed to create more than almost 3 million jobs over the next 10 years. I wonder if we're on our way there. Let's speak to the Managing Director of W Hospitality, Mr. Trevor Ward, a name known in the industry. Mr. Ward, good morning. Thank you for joining us.
Good morning. Thanks so much for the invite to join you today.
Great. So you've been you're very well known in the hospitality sector in Nigeria, even though at the moment you're in Turkey and all. But when you look at the trajectory, the movement of or progress of or otherwise in the hospitality sector in Nigeria, would you say we're on the right path to hitting some of these projections, or we're not?
Well, if one looks back to the previous decade, and one gets very good data from Lagos and Abuja hotels through STR, that we were on a growth trajectory until 2014, 2015, 2016, when we were hit by Ebola and then an oil price crash and recession. But the point I'm making is that from that hit, where the industry had a huge dip, we rebounded very quickly into 2017, 2018, 2019, and even into early 2020. What happened in 2020? COVID-19, something that we had never experienced before. And our industry was shut down by government globally. But it had not happened before in our memory. And again, the point I'm making is that our recovery from that was a growth trajectory and very fast trajectory. It's difficult for us to remember now what happened in 2020, 2021, when we experienced shutdown, work from home, wearing masks, etc., etc. Today, we seem to be completely free from that. And the hotel industry, the hospitality industry in Nigeria has been on a growth path ever since. And a globally competitive growth path as well, because we recovered from COVID-19 shutdown and devastation faster than any other city globally. So by the end of 2022, we were up there. Lagos and Abuja were leading the globe in terms of recovery from COVID-19. The industry, in terms of demand and pricing, is growing still today. Yes, there are peaks and troughs during the week, during the month, during the year, but at the same time, each year is showing growth year on year.
So, well, thank God we have recovered. But, the concerns on skills, personnel training, capacity of the operators, to accommodate international market. How are we on that front?
Well, it's not just an international market. The domestic market is there demanding good service as well. And it's a challenge globally. It's not just Nigeria. Globally, there's so many hotels under construction. Here in Africa as a whole, there's a pipeline of 577 new hotels and resorts in 42 countries. Each of them needs how many staff? A couple of hundred staff on average, 300 staff on average. General managers, deputy general managers, heads of department. It's a massive challenge finding the people who can hit the ground running. You can't open a hotel and say, well, bear with us while we train the staff. It's got to be from the get-go that you're offering that memorable service to your guests. So in Lagos alone, we have a pipeline of 26 new hotels coming on. It will be a challenge for those hotels to hire the right staff. And when I say right staff, they don't have to necessarily be fully trained. They can be trained. What one does is one hires the smile, hires the attitude. But I'm not saying that it's going to be easy. It's going to be a massive challenge, as it is globally.
So, is that what explains the issue of maintenance? I mean, generally, there's the perception that when it comes to maintenance, Nigeria, as a country, as individuals, we're not very good at it. And so you see a beautiful facility being constructed and celebrated today. You come back in a couple of years, and it's a shadow of what it used to be. And we kind of see this when you go into hotel rooms and you see things that are supposed to be basics falling off, and that kind of puts off a customer. So is it because of this personnel management?
Well, at times it's absolutely disgraceful. what you experience in a hotel or resort. But I wouldn't say it's a culture. I'd say it's a mentality that an owner invests an awful lot of money in building a hotel and thinks that there's no more investment needed. What that now is a cash waterfall. Thank you very much. And what is needed is constant maintenance, constant replacement. The mentality goes back, if it's broken, put it in the store and we'll do without. And that doesn't help the guest experience, does it? A well-managed hotel, shall I say also a well-owned hotel, because it does come from the top, will be setting aside funds every month into an escrow account to be available for replacing chairs and tables and glasses and plates and anything that needs repairing, replacing. And that could be, that could be 5% of revenue each month that's put aside, so that the funds are available and management don't have to go cap in hand, to the owner and say, well, we need so much, Olga, give us the money, and the owner said, we don't have it, or I'm not going to give it. So it's a question of mentality, it's a question of procedure, it's a question of good management and planning forward. But yes, certainly some of the badly maintained products in Nigeria and other countries. Nigeria is not unique, but it does seem, it's where we travel a lot. It's not right. It's not right what people are charging the customers for.
Yeah. Well, that's something we hope. This is not on government now, it's on the private sector. And I hope that there could be a change, of this mentality or culture. I don't know which way you call it. But, we have a projection of $1.67 billion for 2025 as revenue from the hospitality sector. And we hear it should be driven by domestic tourism. I hear Dirty December is contributing a whole lot to this. I don't know if you think we can hit this target by the end of this year.
I don't know what these big numbers mean. I don't know how to measure these big numbers, because we don't do data very well in Nigeria or many countries in Africa. So how that's measured, I'm not sure. I don't take an awful lot of notice. Apart from on the movies, I don't know what 1.6 billion looks like. But the fact is, you talked about domestic tourism. I mentioned COVID, I mentioned recovery from COVID. It was very interesting that from the third quarter of 2020, when we were opening back up again after a period of complete closure, when we were opening up again, there were no international visitors because there were no international flights. But the hotels were recovering very nicely, and it was 100% domestic demand. And I believe that created a habit of using hotels for leisure purposes. Business and conference demand had always been there, and that was slower to come back, but the leisure demand became a habit of people. It was called revenge tourism, but I think that's in the past. It's now we use some of our disposable income to stay in hotels and resorts, city centre or beach or country or whatever it might be. So domestic demand is incredibly important, and we recovered in Nigeria because of that volume of domestic demand. 230 million people. If you just take 1% of our population in Nigeria, you're still talking about a very large demand market for leisure products. So domestic tourism is incredibly expensive. If you look at Kenya, when Kenya had domestic problems about 2017 following election issues, very, very quickly, the hotel industry pivoted towards domestic demand. and were very successful in attracting that and saving the industry.
So I guess we should be more intentional driving domestic tourism. We can start from there, before we talk about the international one. But thank you so much, Mr. Trevor Ward, for your time and your perspective on the program today, the Managing Director of W Hospitality. Thank you and enjoy the rest of your day.
Thank you very much.
All right, now let's go global and see, well, I've asked this before, I've asked Ladi before, where he's spending his next holiday. Mr. Ward mentioned Kenya again, so I think we're going to...
Yes, East Africa.
Yes, so I think we're going to have to compel you to go to Kenya, look around, see what they're doing about... We know they're very good with tourism. They've attracted a lot of tourists. Their tourism
All
revenue...
expenses paid.
Yeah.
Nice.
By who?
You and your backers.
Okay. All right. All right.
At this point.
Okay.
Yeah, so I'm happy.
All right.
Anytime. Okay. I'll pack my bags. Thank you so much, Ini, for that. All right, let's get a check of what's happening in the global space now. I'm starting with the UK. We see UK's economic landscape is at a crossroads. Fresh data shows government borrowing in July came in far lower than economists had forecast, raising questions about health of the public finances and what this means for the markets. Well, let's hear more now from our London Bureau Chief. We have Juliana Olayinka with the details. Great to have you, Juliana. Good morning.
Laddie, good morning.
Yeah, so I guess this is good news. The UK's borrowing in July came in lower than expected, from economists. What drove this?
I think this is quite good news for Rachel Reeves, the Chancellor of the Exchequer, who has, as you know, has had a really tough couple of months, particularly as she's preparing for the next fiscal event, which is the autumn statement. And there are suggestions that she is going to have to raise taxes because she doesn't have enough fiscal headroom. But there has been a bit of a reprieve because this morning we had borrowing data from the Office for National Statistics, which does show that the UK government borrowed much less than expected in July. I think the tax receipts came in at about £1.1 billion. Now, this is well below the 2.6 billion that economists had previously forecast. And again, this has really got to do with tax receipts. There are a couple of times in the year where lots of self-employed and business people put their tax receipts in. That's typically April and July. So this has really boosted the government's coffers and sort of offset other spending requirements that they've had, which includes, of course, pensions, because they had that government U-turn at the beginning of the year. So like I said, for the Chancellor, this provides a temporary reprieve ahead of the year. But all you need to do really is just kind of zoom out a bit, and you can see that overall borrowing this year has already way overshoot the Office for Budget Responsibility's forecast, meaning that she still is going to have to find further savings.
Right, I guess that's what smart investors do. They try to zoom out. They don't just look at the short term, at this point. But how might financial markets, especially gilts and the pound, respond to the lower borrowing figure?
Yes, that's right. Your favourite subject. I had to scratch my head a bit for this. But markets have been volatile, not just because of what's going on in Washington and on the continent, but this week, gilts surprisingly staged their best rally in about a month. 10-year yields fallen 6 basis points to about 4.7%. And this is even after we had inflation data yesterday, which was much higher than I think economists had predicted. CPI currently running at 3.8%. Now, analysts are saying that part of this is down to positioning and the mood music coming out of Downing Street, which means that gilt yields had climbed back towards the top of their 6-month range. That's the best I can do on that one, Laddie.
Thank you so much, Juliana. But let's look at other issues now. Tax. At this point, we're seeing retailers in the UK warning the Labour's that the Labour's planned business tax changes that could drive, food inflation as high as 6%. How worried should, households be about another squeeze, on living costs at this point?
Yeah, I think it does feel tough. We're supposed to have retail sales figures out tomorrow, but we're not going to have that. Quite surprisingly, the Office for National Statistics decided to stop those figures coming out because I think the data modelling in the UK hasn't been as accurate. I'm sure you saw at the beginning of the week, there was a story about revising the UK economy's figures post-COVID because they were wrong. So I think there is a little bit of caution in the air about how we can actually track these figures rather than just a few economists sort of putting them together. But I think there are concerns. The cost of living is still quite high. I know as a mother, you go out, it's summer at the moment, and you're constantly spending. Again, going back to that data we got yesterday from the ONS showing that CPI was at 3.8% away. If you take off alcohol and petrol, it actually was at 4.9%. Now, I know if you look at that figure globally, it does appear as if we're doing quite well here in the UK, but of course it does all add up. So yes, there are concerns that tax changes could hamper businesses, which is why, again, the Chancellor is under massive pressure from all sides, including within her own party, to get it right and to stick within those fiscal rules. But of course, make sure that there is room for the private sector to breathe, because, of course, if they're breathing well, it trickles down. We all prosper, don't we?
Yeah, we all need to breathe well. A delicate balancing act there to, getting the taxes right and also making sure that we protect consumers. Well, thank you so much, Juliana, for the details there.
Thank you, Laddie.
All right, let's take it on to Japan now. We see Japanese manufacturing activity that shrank less than expected in August and was close to breaking back into expansion territory. Purchasing Managers Index data showed today that the S&P Global Flash Manufacturing PMI, that rose about 49.9 points in August from 48.9 in July. That's according to preliminary data for the month. The print was higher than estimates of 49.2, but just remained in contraction territory below 50. Still, the higher PMI reflects some improvement in Japanese manufacturing activity amid some clarity for the sector after the U.S. agreed to impose relatively lower export tariffs on Japanese goods. Then in India, we see the economy is firing on all cylinders. A flash survey of private sector activity as the composite PMI surged to a record 65.2 points in August, dramatically exceeding expectations and signaling historic demand across services and manufacturing. This explosive growth has empowered businesses to hike prices at the fastest rate in over 12 years, placing renewed pressure on inflation and likely prompting the Reserve Bank of India to extend its current cautious monetary stance. Then to the currencies now, we see emerging market currencies are coming under renewed pressure as concerns swirl over China's economic slowdown. Bearish sentiment towards the yuan has surged to its highest level since mid-May. Driven by weak July data, retail sales missed expectations at just about 3.7% growth. Industrial output hit its lowest pace since late 2024, and property prices continue to decline. This wave of pessimism is rippling beyond China, with investors also reducing positions in other Asian currencies and growing doubts, about regional resilience. Then we see Elon Musk's Starlink is making a bold move in the skies. The satellite internet provider is fast-tracking its expansion into in-flight Wi-Fi, now courting premium carriers in the Middle East. Is reportedly in advanced talks with Saudi Arabia to equip more than 140 of its aircraft, while also wooing Emirates and Fly Dubai. If successful, the push could reshape how luxury airlines compete for connectivity and passengers. So yes, I guess it also kind of dovetails into what we're seeing happen with some of our airlines here. Either you're turning off your phone or you're putting it on airplane mode, and we've seen the kind of confusion is caused.
Yeah, but Laddie,
I
think the NCAA has come out to clarify that.
Just turn it off.
To say, put it off at the beginning when the flight is leaving,
Land or
departing,
leave.
and when it's landing.
Right.
Yeah, so these are the 2 points that you need to put your
Because
phone
sometimes,
on.
when I'm in the plane, I'm trying to read my books.
You can do that when the plane is steady on air, laddie.
Right.
Nobody's stopping you from using your device.
Just a few minutes.
Yeah, just when we are departing and when we are landing. For everybody, I mean, I don't know the technicalities,
right,
but the technical guys say this is what we should do for everybody's safety. So please.
So do we just get rid of airplane mode at this point? I guess it's useless now. That's another discussion. Thank you so much, Chidi.
Okay, laddie, you win. All right, so just before we go, yesterday's market ended in the red again, a second one for this week. Today is Thursday. We'll see, perhaps we will have a recovery, but it's been profit-taking mostly from last week, from Wednesday last week. We've seen the market stay in the red zone with investors really determined to get their profit out. But the good thing is some companies have started paying their dividends, and that kind of comforts you, isn't it? If you're an investor there and perhaps you haven't been able to take some profit before the dip started, you can get some dividends and cushion some of those effects until the market comes back up. Well, that's it on the program. Thank you so much for being a part of Business Morning today. So glad to be with you. We'll do it again tomorrow. I'm John Mekwa. Enjoy the rest of the day.